Hey, welcome to this episode of Think Business. I'm looking forward to talking with Jeff Kamys. Jeff, it's great to see you again. I appreciate you being on the show. You are the CEO of Inherent Wealth Fund. So we're going to dive into that. You're an investment specialist. So I always like talking to investment specialists to kind of get their vibe and their pulse of what's going on in the market. You know, as a business coach, of someone who works with people all over the globe who are successful and get them unstuck. I love having people on the show, and really starting off the show with talking about maybe a recent stuck and how you got unstuck, because I think people learn through stories and lessons. And so where's your recent stuck/unstuck?
Yeah, I mean, actually, well, thanks for having me on again, John. I appreciate and hello to your audience. Honestly, this venture that I've launched, it's very new. We're in a new industry for investment. And this has been, it's been difficult because we launched into a really hard market. I mean, we had 15, 16 years of zero where money was really cheap. And now that it's more expensive, people are being much more careful with their spending. So with increased inflation and higher interest rates, an investment fund like myself, there's billions and billions, hundreds and hundreds of billions of dollars that have left the market into much safer things like money markets and or bonds. So this has been where I've been stuck a little bit. And, frankly, getting up every day and thinking, okay, I'm going to press forward again, and you're watching, you're not growing your fund, it can be troubling because it's not an inexpensive thing. So to me, I'm looking for points, and I think, points in terms of how I keep going. And what I do is I just keep like trying to carve the ice cube or carve the mountain. And you even if it's a little foothold, you try to get a little foothold and stay there. And it's scramble. It's a difficult time to raise a fund. So I'm kind of going through that right now. And for me, I keep trying to press through. It's like there's something. I always feel that one of the things that I loved about the internet is that I always feel that there's something I can find that I haven't thought of.
Yeah.
And there's a way to promote myself or to get myself out there. We're a little bit kind of hamstrung a little bit because we can't go out and actually talk about our fund and be like, here's what we're doing. We can go on a show like yours and we can promote it a little bit. But I think, I always feel like if I can find it, and I'll work tirelessly, like 18, 19-hour days when I can, to try to find something new. Because I think there's always an idea out there if you're open to going after it and you have the energy to do it.
Yeah. And I think also it's continually, and I work with my clients on this a lot, Jeff, is continually refining your message to be clearer and clearer. The education and content creation and educating people, I think is so important, but always getting as clear as you can. And sometimes as clear as you are, 6 months from now, as the market moves and people are more distracted and this and the other, sometimes you even need to get clearer and then determine how that message gets delivered. All right. Well, thank you for sharing that. Let's talk about, you're an investment strategist. And so let's just kind of like zoom in for a minute on the term strategist, right? Like what does a strategist do to stay ahead of real time? Because I think as we look at kind of just, what you do, I want to kind of break it down, because I think I have a lot of people on the show who will say, oh, I'm a strategist of this and a strategist of that. But what's the formula or the definition of what a strategist really does to be a strategist?
Yeah. Well, okay. All strategies aside, sometimes it's just, you don't know. It's the market is at play. But when I grew up, I was a baseball player. I love numbers, things that repeat and are
Moneyball.
done. Yeah, that's right. Yeah, well, yeah. I not only did I was in that, but when I had my fantasy business, when I was in my 20s, I wrote articles with the people that were in those movies. We were in fantasy leagues together, like Paul B. Podesta and people like that. So, cool. I grew up in that industry. Like I said, my kids always tell me, you failed, Dad. You should have been like a baseball GM. And I would have loved that to pick. Yeah. But we didn't think about it that way. We were like people writing in our hovels, in our bedrooms and whatever about these things that we thought were really interesting, which is really looking, what it gives you the opportunity to do is there's so much data in the stock market that there's patterns. And so you're looking for patterns. Now, there's more tools than ever to do that. But when we started doing this in fantasy sports, no one even had some of these things like dashboards where you can look at something every day and be like, okay, this guy looks like he's a free agent I should get. He's leading the league in receptions. How come no one knows he's even there? And it's because he's an unknown, maybe a rookie. But I always think being strategic or doing this analysis is really it's a bunch of complementary things. When it's there, you have to understand the psychology plus the data, and then you have to kind of encapsulate that into a vision. And why do you think your vision, if you apply this certain strategy into play, why do you think it's going to work? And you have to be able to answer those questions and take accountability for them, because and so I always looked at analytics like projections and things like that of players. Why? I was wrong. You have to be somebody who's asking a question like Socratic method. Why? Yeah. And that's what's the basis for strategy.
Yeah. I love that. I love the book, Socratic Selling, which is a great book. I read it so long ago, but let's talk about that. Psychology. I love breaking things down into formula. Psychology plus data equals vision, and you need accountability. One of my favorite stories about Sam Walton, who would be in the boardroom, and everybody would be giving him data, and he would look around the room and think that nobody even in the boardroom shopped at Walmart. So
that's right.
So he'd take the data and he'd go to the the diner and have coffee and pie with his customers to understand what of the data was connecting to them. He'd come back to the boardroom and say, this is what we're basically focusing on.
That's so simple.
He understood.
So simple.
He understood the human element of psychology and data, right? And then there's the idea that if you don't bring data to the meeting, people use their own opinion. But there's that mix of art and science, the mix of data, the mix of intuition, the mix of psychology to get people to understand if it's what they want to buy because they're connected to the vision. So I want to dive into the psychology a little bit more, because when you talk about the psychology, that's about the guts, the instinct, the listening to the consumer, the listening, what people are not saying. So just dive into that piece of the formula and what that means in a little bit more specifics to you.
Well, we do things sometimes when we're asked a question, we want to get to the right answer, but yet our actual behaviors are the indicator, right? So sometimes that's like once you observe something, it changes. And I think that's when you ask these questions in marketing surveys, like they'll send out, I have an agency business, and a lot of times on the marketing side, they'll send a survey out. But I think this survey becomes something that's observed rather than having a conversation with people. And I think a lot of this stuff has to be done old school, where you're actually conversing, maybe with people who are like maybe props or they're shills, and they go in there and they actually answer, get good information from people. Like, a good place to really find information is at the watering hole. People will tell you things when they're a little bit more relaxed and the facade is down. I always think that those surveys are not always as valuable, because especially nowadays, people are worried about how they're appearing in the public to other people. And so you don't always get the honest answer, which is really the valuable answer. It's somebody who's going to be willing to be more opinionated. So I think diving down, there's a million ways to get data, but that data is not important unless it's really actually pursued from a personal side, to really know what it means. And I think that's the harder part of getting data, is the actual people side of data. And we've lost a little bit of that because it's so easy to grab data and have it tell us something. So I think that's the interesting part, is that it's almost like it's old school. It's like, let's not think about what everybody's doing now. Let's think about what marketers 50 years ago did, which was really go talk to people, and not in those rooms like that are kind of scary, where you have that commercials, where you have the commercials and you're paying people $100 to maybe say the right thing and they're a little intimidated. But it would be like you going to your family or friends or people that don't know you have that ad and just acting like you didn't do it and asking them real questions. They're going to tell you what they thought about it. And I think that's much more interesting and much more valuable.
Yeah. Like, good. Well, thank you. Thank you for that. And so now, so you're an investment strategist. We kind of talked about the word strategy. Let's talk about the word investment. And I want to talk about, and we may have talked about this the last time you were on, but there's always a story. If you invested $5, I'm making this up kind of, but if you invested $5 every day, or $1 or $5 since 1920, today you'd be worth 7 point, But let's talk about investment, because we're in a market today where I think it is harder to save for the majority of the world. Everything is more expensive. You go to the grocery market, it's through the roof. Everything just costs more money. And so let's just talk about some fundamental ways that the average person can save.
Yeah.
And what that minimum should be of continuity.
Yeah. Well, I mean, the basic ones are the ones everybody says, which is like not buying Starbucks for $5 and maybe getting your own coffee at home for 50 cents. I mean, that's probably the basics, or just, essentially like bringing your water. So you're not buying water bottles and things like that. And those kind of things. I mean, those are really the small items that actually add up to a lot. The single person doing coffee every day at Starbucks, spending $10 to $20. That's a lot of money at the end of the month. It could be $300-$400.
Mm-hmm.
And so, not to hurt Starbucks growth, but the reality is that $400 compounded is like $5,000 a year. You compound that since from the age of 20, that can be a lot of money at the end. And the compounding really starts in the last 5 years when you're getting closer to retirement. In terms of general savings, I guess people will start probably going out to eat less, and I'm probably the worst at that. I love going out, and I love it because of the communication side. That's where I love getting market research for myself. I talk to people about what's going on all the time, and I think that's a great place to do that for myself. So that's obviously the easiest way, is just cook a little bit more, and people will start doing that. And you're seeing that now with inflation, having outpaced, growth in wages over the last year, but it's starting to come down. At least that's the good side. But those are the simple ways that people can save. I mean, I think a lot of times the worst thing you can do is sometimes cut out that vacation, because I think that's what regenerates you. And I think you can't underestimate the value of getting away when you, especially then when you need it. It's almost like that, kind of like that fear test, like defending your life. Like, instead of, the joke in that movie was that he always played it too safe. I don't know if you know the movie, but the concept would have been, sometimes you just have to go and be comfortable with yourself doing it so you can feel better about the action itself.
Yeah. All right. So that's how you save. How do you invest? It's kind of like it's kind of like the philanthropy model has changed over the last decade. It used to be, people gave money when, they were at the end of their life, and they gave millions and this. And, today I think everybody can feel good about giving a dollar, and they can feel the philanthropy. So what can somebody start to invest? It always amazes me. I shouldn't say amazes me, but it's always interesting that, a lot of companies have 401ks, and people don't even, that match, and people aren't even putting, their money in 401ks early in their career. So what are some of the things that people can start to do small?
Well, by the way, on the 401k, I think part of that is because they're not interested in the holdings. And a lot of times you're in really boring mutual funds, and you can't pick the things you want. You can't pick individual stocks, and you can't pick ETFs either in a lot of those mutual funds, in those 401ks. And I think if they open up that'll change things. And you can see that a little bit happening because they're getting rid of mutual funds. But that was like a side note. Mutual funds are kind of converting into ETFs, I should say. But investments, I mean, keep it simple. It really is. You would have done fine if you invested. Investing in single stocks is difficult. That's kind of the concept of why you'd be in an ETF. Because when DraftKings went all the way up and it ran up to $80, $90 or whatever it was like 3 years ago, and then went back to 12. If you were invested in something that was more diversified, like any fund, and most obvious thing you should invest in is something or like. If you love Apple, you should buy Apple, and it's a great company. If you love Microsoft products, you should buy those. And if you're excited about AI, maybe you should be invested in an AI ETF. Things that you follow, I was always, when certain products come out, I was always like, I want to find the stock. And there isn't always a stock for certain products because they're not always publicly traded. But I think if it's something you like, and you can make a defense, or you can defend why you think it's going to grow, I think that's a product you should be invested in. But overall, most investors should probably just be in the SPY or an S&P 500 index fund, because it's the easiest way to not have to watch something. And most people who are going to day trade are going to lose. That's the unfortunate truth and reality. And it's better to not be super active because you're not going to be able to get the timing. It's just a bared out fact. You better be a long-term investor, pick something. But oddly enough, and this, John, the people that really want to get involved always feel like they know something more than the market, and it's really difficult. Like most people went into bonds in January and February because it was safe, and they were looking at like a 6-month bond with 5% yield. And they thought, hey, I can do great with that. And then in the last 6 months, the market's made 12%. And they're like, oh, I didn't make that. They made like 2.5% on that bond. And so, it's hard to really predict what's going on. I mean, everybody would have said the market would have gotten shelled the last six months, but it hasn't happened. And the NASDAQ's up 30% since January. So, good luck trying to figure out what happens. But if you're in there and you lost 12% or 15% last year, and then you made 30 this year, you're still up 15.
Yeah. All right. Well, I appreciate that. Thanks for sharing that. All right. Quick speed round, Jeff. You ready?
Yes, sir.
Book since we last talked, a book, TED Talk, or an article that's had the biggest impact on you.
I always read Sun Tzu Art of War. It seems like every year.
Okay. Did you ever read The War of Art by Stephen Pressfield?
I like that. Yeah.
It's great book. Best piece of advice you've ever received?
When you're going through hell, keep going. And I never received it. It's just a Churchill quote that I always love.
Yeah. I was in London last year. I went to the Churchill War Rooms. It was incredible.
Oh, yeah. I want to go. I haven't been.
Yeah. Oh, it was amazing. Last question. One thing everybody can do to determine what their own formula is for their own inner strategist is
be open to other people maybe criticizing or bringing advice or opinion, but stay true to what you believe. But I would be open to more things. I think one of the things that's hurts growth is when people are not open to the idea that maybe they need to change. Maybe it isn't working. And that's a good thing to look at.
Good. All right, good. Thanks, Jeff. It's always a pleasure connecting with you. I appreciate it. Tell everybody who your ideal clients are and how they can connect with you.
Well, I run a fund in sports betting and gaming called iBet. My company is called Inherent Wealth Fund. So if you're interested in the growing sports betting and gaming market, that would be a good way to get some exposure as an investment. And my ideal client is whoever's excited about that.
All right, good. And Think Community, if you want to connect with Jeff, please do. If you want to connect with me, you can check me out at jondwoskin.com. Jeff, it's always great to connect with you. I appreciate you being on the show. It's I always like to recap at the end of the show and just kind of extract one thing, because you said a lot of really great things. But one of the things, Think Community, is figure out what your formula is. Jeff shared with us that his formula for strategy is psychology plus data equals vision, kind of, with an umbrella of accountability. Figure out your formula. It really helps kind of get you back to center and get you hyper-focused when you need it the most. Jeff, thanks for being on the show. I appreciate it. And Think Community, thanks so much. Thanks, everybody.
Thanks.